and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent investor relations of Apcotex Industries Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the second quarter of the financial year 2024. Before we begin, a quick cautionary statement. Some of the statements made in today's call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, I would like to introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Abhiraj Choksey, Managing Director, and Mr. Sachin Karwa, Chief Financial Officer. Without any further delay, I request Mr. Sachin Karwa to start with his opening remarks on the financial highlights. Thank you.
Thank you, Purvangi. Good afternoon, everyone, and welcome to our earnings call for the second quarter and first half of financial year 2024. I hope you had an opportunity to review the financial statements and earnings presentations which have been circulated and uploaded on the website and the stock exchanges. First, let me brief you on the financial performance for the second quarter of financial year 2024. For Q2 FY24, the revenue from operations stood at INR 279 crore, which witnessed a slight decline of around 1.4% on year-on-year basis and increased marginally by 0.5% on quarter-on-quarter basis. EBITDA for the quarter was INR 32 crore, which declined by about 30% on year-on-year basis and increased by about 24% on quarter-on-quarter basis, with EBITDA margin stood at around 11.3% and net profit margin stood at 15 crore, which declined by about 50% on year-on-year basis and increased by about 26% on quarter-on-quarter basis, with PAT margin stood at 5.48%. In Q2 FY24, we witnessed highest ever quarterly volume and export volume growth of 35% and 114% year-on-year basis respectively. Revenue growth was flat even though volume increased due to sharp fall in the raw material prices and thus lower realization of finished goods. EBITDA margins were affected with lower margins in NBR, XLB and paper due to pressure on demand. There is no significant inventory loss or gain in this quarter. Furthermore, PAT margins declined due to increase in depreciation and interest costs due to new expansion projects. If you take the first half of financial year 2024, the revenue from operation decreased by 5.5% year-on-year to INR 557 crore. EBITDA was INR 57.1 crore, which degrew by 39% as compared to INR 93.7 crore during the first half of last year. EBITDA margin stood at 10.25%, while PAT margin is INR 27.4 crore. In H1 FY24, we witnessed volume and export volume growth of 28 and 120% year-on-year basis respectively. Revenue decreased by 5.5% compared to volume increase of 35%. This was due to sharp fall in raw material prices and thus low realization of finished goods. Capacity utilization from new projects stood at 25 to 30% approximately. With that, I would like to open the call for question and answer session.
Thank you so much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, We will wait for a moment while the question queue assembles. The first question is from the line of Mr. Aditya from Securities Investment Management Co. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So in the last quarter Concall, you had mentioned that you were expecting some inventory losses in the current quarter as well. But in our presentation, we have mentioned that there were no inventory losses. So if you could just explain what happened, did the prices spike up in this quarter leading to some inventory gains?
Yeah, exactly. I think when we met in July, the prices were still going down. So I think if you're looking at month on month, July we had sort of some inventory losses, but then August and September sort of things corrected. So whatever losses were there were pretty much made up. So therefore, as mentioned by Sachin in the opening remarks, there was no significant gains or losses this quarter.
Oh, got it, sir. So and now if I have to understand our raw material prices, so are the prices now at pre-COVID levels or are they still below average levels? And how do you see them going forward?
Very hard to predict. As far as material prices, yeah, I mean, they are probably around pre-COVID levels. I have not checked exactly recently. And as I said, we have 4 or 5 key raw materials, so I'll have to check for each of them. Going forward, hard to say, frankly, I mean, there's just so much uncertainty. So we are not in the business of predicting what happens. We try and estimate, short term what's going to happen in the next month or two and accordingly build some inventory strategy. But as we have to have certain inventories. A lot of them are imported, so you have to have a couple of months, 1 or 2 months of inventories, to cater to our customers. So it's very difficult to predict is a short answer, I guess.
Got it, sir. So what I was trying to understand was if we have to look at a raw material basket, so are they still at, below pre-COVID levels where there is lesser chances of reducing further, or they are back to average levels?
Sachin, do you have this data pre-COVID, or maybe can we dig it up quickly to answer the question maybe at the end of the call if you don't have it? And if we can't do it quickly, then can I request Aditya to send a quick email to us and we will reply to you?
Sure, sir.
Sorry, I don't have the data from pre-COVID levels for raw materials.
Got it. So my next question was regarding our end product prices. So are we reducing our prices to sell our products due to insufficient demand in the markets? So the reason I'm asking this question is because Top Gloves in a presentation, they expect the latex prices to drop further due to lower demand. So are we seeing a similar situation for our other products as well?
No, not for other products. And even the nitrile latex products, I don't know if the prices will drop any further. It's all related to raw materials, right? Beyond the point, us or other manufacturers of nitrile latex for gloves, it's as it is at a level where we are, pretty much as low as we can get because we are, kind of EBITDA break even on that product so far. I don't think we can afford to reduce it any further. And I don't think anybody else can either. So I don't think the prices will reduce, but certainly it's the most challenging market in terms of margins right now. For other products, as I said, we are by and large passing along our increases or decreases to our customers. Obviously, there has been a little bit of challenge, not so much on demand so far, but more on supply because we have added capacity for example, our other latex, the multi-purpose latex plant that we have set up. So we have added capacity. Our competitor has added capacity in the last year. So obviously there is a little bit of, market share. Everyone wants to maintain or grow their market share. So the supply is the issue, not so much the demand so far.
Got it, sir. And so what would be the current domestic and export mix for first half?
Sachin, what is it? It's about 70-30, right? 70 domestic, 30.
Yes.
30% export.
This is in volume terms, right?
In volume terms, yes. And value, volume and value, I think, right, Sachin?
Yes.
Yeah.
Volume and value.
Okay. And so what will be the end user industry mix for the first half? Just a rough range.
Sachin, do we have this data?
No, sorry, just missed the question.
End user industry mix.
End user industry mix. So basically, the exports have gone to more to the carpet, XNB, and construction. That's the end user.
I'm just trying to find first half data. We'll have to come back to you on this, but by and large, latex is probably around 55% now, 55+% overall revenue, and rubber would be 45%, meaning high styrene rubber, nitrile polyblend. Within that 55%, I do not have the percentages, but again, paperboard would be the largest, construction would be second, followed by carpet, and then nitrile latex, and then tire cord, and so on. So we'll get that back to you on the percentages as well.
Sure.
But if I were to venture, I guess it would be about 15 to 20% paperboard, about 15% construction, 10% carpet, 10% XNB latex, and a few others.
Sure, sir. So thank you for answering the question. So I'll run back in the queue.
Thanks.
Thank you so much. The next question is from the line of Aditya Khetan from SMIS Institutional. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, if you can highlight what is the sequential volume growth for our company in this quarter?
Sachin, can you answer this, please?
Yes. So volume growth for compared to Q1, we are at around 5%.
Thank you.
And sir, this would be largely from the nitrile latex business only?
No, I think it's across the board, I think 5%. Yeah, overall.
It's overall.
It's not that nitrile latex has grown too disproportionately. Yeah.
Okay. But sir, what I believe, so other businesses, whether it is NBR or HSR, they are really operating at peak level or peak utilization level. So the only room where we have added the capacity, so there only there was some room for volume improvement.
No, we did grow in NBR as well. We had, automatically some capacity of NBR was freed up because we were making nitrile latex in the NBR product line. You're right, HSR is not grown, but that's only about 10 to 15% of our business. The rest of it is all grown. NBR is also grown. Our volumes for SB latex and styrene acrylics have grown, and nitrile latex has grown Q1Q as well.
Okay. And sir, if it is possible, so for full year FY24 and 25 and 26, what would be our full year volume guidance growth for the next 3 years?
As per policy, we don't give volume guidance.
Okay.
Obviously, our intention would be to utilize the plant capacities within the 3 years. So you can calculate that yourself. The plant capacities and so on are public information.
Okay. Sir, globally into the nitrile latex front, how is the export demand right now shaping up? We believe, sir, we were stating earlier 6 months back that demand would start to pick up from second half. So we are nearly standing at that level. So how you see that we can see a jump into demand and consequently ramp up in utilization, or still there is time of around 3 to 6 months considering demand is not picking up globally?
So frankly, for us, for this 50,000 ton plant, demand is not so much of an issue. It's margins that is the issue. As I mentioned earlier, EBITDA margins are not great at all. In fact, close to break even. And so therefore, for us, doing the volume is not the issue, it's the margin that's the issue. And yes, as of now, the margins have not improved either because of the supply-demand mismatch. There's excess supply and less demand. So that's the issue.
Okay. So sir, this could be resolved by the second half, and we can operate at much higher levels, so we can actually break even and also make some profits also from this business.
I mean, we hope so, right? That at some point that will turn. We don't know when that is. There are lots of reports available for large companies online, and lots of predictions from 6 months, 2 years, we've heard several numbers. Difficult to predict, frankly.
Got it.
As of today, we're not seeing any significant improvement.
Okay. Sir, is there any new product which we are planning to develop, like this product of nitrile latex we have developed in-house? So is there any other plan of new products which are being developing right now and which could come out in the market in the next 1 year, and that would give a very good boost to our turnover? Is there something going into the R&D part which can fructify into sales?
Yeah, absolutely. Look, within the SBR latex product range, we are developing new products for new applications so that we can utilize, that would help with quicker utilization of our capacity in Taloja. There are other products that are in the works, but that would require investment. As of now, given the current balance sheet, we have not taken any decision of investing any larger amounts for new plants as of right now. We are focused
what would be the CapEx plan for the next 2 to 3 years?
Sorry?
So what would be the CapEx figure for the next 3 years then?
As of now, it's only maintenance CapEx that we're looking at. So we have not made any decision on future major CapEx plans. One thing that is on the cards is, of course, the NBR second line, which we plan to add about 15,000 tons capacity. Everything is ready on paper, including the designing of the plant and so on, but we are holding off on that investment as of now, given the overall uncertainty in the world, and also want to manage a balance sheet. So as of now, no decision is taken for future major capex.
But for that NBR, I believe almost 30% output goes to automotive and also to some of the construction segments. So globally, the demand is not that bad into these segments. So what is still holding up on taking the call on NBR?
I think it's the margins which have been going up and down, and also we're waiting and watching to see what happens a little bit in the auto segment with EVs coming in. So that is the one uncertainty, because the NBR goes into traditional ICE cars. So that would be one issue, but it's not a major issue. I would say we are still quite bullish on the Indian market, which is 30% in auto. Remaining is, of course, in various other applications like rice roll applications, hoses and so on, industrial application, which we expect to grow in the long term. The question is obviously our internal balance sheet also, that we want to ensure that we are comfortable with taking that kind of investment of about 200 crores, which is what our team has worked out now.
So sir, this NBR doesn't go into EV?
Much less quantity.
Okay, so considering over the next 4-5 years, so the world is transitioning towards EV only. So you think that NBR output also can decline drastically, the demand in India?
I don't think it's going to be overnight, because of course EVs are coming, but hybrid cars require NBR also. So it just depends how fast. I think the next 10 years, we, at least in India, which is our primary market for NBR, we see overall it should increase. But we are, as I said, waiting and watching for a couple of months more before taking any final call.
Got it. So just one last question, sir. We had made an investment of 200 crores into the nitrile latex. So we are holding on to our guidance of 600 crore top line.
Say again?
So the 200 crore capital expenditure, so 600 crore top line, so we are holding on to our guidance, or we are
absolutely. Yeah, that's true. We made a 200 odd crore investment in 2 plants, both put together, nitrile latex as well as the multi-purpose latex plant in Taloja. So both put together is a little over 200 crores, and that we expect to add about 700 crores to our top line. And as the capacities are fully utilized. So that continues, yes.
And sir, what would be the EBITDA margins onto this 600-700 crores?
It's, under normal circumstances, as we had predicted, the EBITDA margins would be similar to what we had earlier, a little bit better. Our overall company EBITDA margins would even go up a little bit. But given what's happening with the nitrile latex market as of today, it's pulling down our overall EBITDA.
Okay. Got it, sir. Thank you, sir. That's it.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address the questions for all participants in this conference call, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, please rejoin the queue. Our next question is from the line of Bhavya Sonawala from Samasa Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity, sir. Am I audible?
Yeah, go ahead, Bhavya.
Yeah. So just a couple of questions. The first question was with respect to the export market where we have seen great volume growth. Just want to understand, is it the volume growth, has it coming across the board or any particular region that we're seeing some good growth coming and that can continue?
Yeah, I mean, look, one is, of course, with nitrile latex coming in, it's largely exports to Southeast Asia. So obviously that has helped with export volume. But other than that, carpet and construction emulsions have also been very strong for us in the last 6 months. Overall, we have seen more than 100% growth across overall in exports. I don't have the breakup of exact increase over each section, but these are the 3 largely that are leading the exports.
Yes, these are the 3 largely product segments.
Okay, but going forward, any particular region that you think you're excited about where you can see some considerable growth coming up?
Look, we continue to focus on our regions of Southeast Asia, Middle East. We've seen good traction in Africa. We've also seen good traction in Russia, and the Middle East region, Egypt, or Middle East, North Africa, is Egypt and Turkey as well. So these are some of the other markets and customers that we have developed over the last 6 months.
Okay, understood. Just one more question, I think very similar to the previous participant in terms of new products. Just trying to understand in terms of the whole industry worldwide, have you seen any more innovations coming up that you think that makes sense for us to venture into? You spoke about something that might require some investment, but I'm just trying to understand the industry. Has there been some new product that is exciting that you think we can be a part of going forward?
Yeah, for example, there are a few that we are in the middle of developing. We don't exactly know how much it will pan out and what it is, but we are definitely developing a few products on the SBR side because, these are water-based emulsions. So there are lots more environmentally friendly than solvent-based emulsions. So, for example, one of the products is for, EV batteries that we are developing. We don't know how much volume eventually will turn out. So we're working with some battery companies that are putting up capacity here and in India and jointly developing some products. So yeah, for sure, there are examples like that. One example that we've been successful in, again, converting solvent-based products to emulsion is geotextiles. I think I mentioned that in one of our previous Concalls. And so that's something we're looking at growing because our product provides the extra reinforcement for geotextiles that is used in infrastructure. So again, these are new applications. Obviously, the recipes and some of the things change, but the basic chemistry remains the same. So that's what we're looking at, yeah, few other products along those lines. And these will not require significant investment. So that's one part of the product that R&D is working on. And then R&D team is also working on additional more value-added products is what we're looking at, where there is fewer competition around the globe, no one manufacturing in India. And it's something that, is an adjacency to us, like similar to nitrile latex that we felt was a good adjacency for our business. So similar to that, we are looking at a few other products, but that will require investment. And no decision has been taken at the right time. When that does happen, we'll of course inform you.
Understood. That was helpful. Just one last question from my side.
Sorry to interrupt you, Mr. Sonawala. If you do have further questions, I would request you to please.
Okay. I suggest let Mr. Sonawala, since it was his last question, let him finish and then we'll move on.
Sure, sir. Not a problem.
Yeah. Thank you so much. So basically, just on ApcoBuild, I understand that, we have just started out with our new capacities and a lot of investment has gone in and the situation is also not favorable. But basically, do you think that we will be doing more in terms of ApcoBuild going forward? Would we be more aggressive in terms of trying to build a dealer network or improving our reach making this
Yeah, absolutely. No, I don't know why you think we frankly have not invested a lot of money in ApcoBuild. We have been growing it over the last few years. Slowly, it's a small part of our business, but it's been growing at somewhere between 18 to 30%, year on year, depending on the year. So we are actively growing it in terms of distribution network, number of people on the ground, teams becoming larger. We are hiring more people. We're spending more on branding. So that is definitely happening. Absolutely. And that doesn't require any capital investments because we're, using our current plants to do the same. And for some products to finish the product range, we're outsourcing some as well for some products.
Okay. This is thank you so much. This was really helpful. Just a suggestion, if you can just put ApcoBuild some details of this in presentation. So
sure,
it just makes it easy for us. Yeah. Thank you so much, sir. Thank you.
Sure. Thanks.
Thank you. The next question is from the line of Saurabh Shroff from QRC Investment Advisors, LLP. Please go ahead.
Yes, hi. Am I audible?
Yeah, go ahead, Saurabh.
Hi. I would have a couple of questions. One is, given that we have this new project, this is a question and a suggestion, if you could, the NDR and the multipurpose latex, if you could maybe just qualitatively help us understand how the margins stack up, let's say, for our legacy old business versus the new one. You did mention that the ND is barely breaking even, but I guess something in terms of the volume or capital utilization levels, just so that we get a sense for what the underlying business is doing, right? Because what is happening to the glove market is outside of your control. But at least from our end, how the business is shaping up, I think that would help if there is something that you could share with us.
Look, I'm not sure if I've understood the question correctly, but I'll try and answer and see if that answers your question. So obviously the nitrile latex, we've been in this business for the last few years. We've been using our current plant capacities that now we have obviously given back to NBR and our traditional SB latex and other styrene acrylic and those products. So obviously it's a new plant, it's a new technology, it's a new way of manufacturing. So the approval process is going on. Obviously, given the current market, the approval process is taking a longer time than we anticipated because there's really no pull from the market because of the excess supply. However, due to our relationships, we are pushing that along. Overall, I would say we're at about 25-30% capacity utilization in the first 6 months. Unfortunately, the EBITDA margins are what they are. That's the problem. Other than that, we just have to, we will continue to push to get to 100% capacity utilization level as soon as possible. It's going to take a few more quarters. We were hoping by the end of the year, but I'm not sure whether that would happen. And as far as the other, multi-purpose latex plant, that's also at, I think, almost 1/3 capacity utilization. And so, we're quite happy with the progress there. We had a lot of demand from export customers as well as some of our domestic customers that we hadn't been able to cater to in the last 2 years because of our capacity. So there, I think there is no major issue. Look, cycles will continue. There will be a few quarters where demand may be a little lax. Nowadays, for example, I'll tell you one big problem is in countries like Egypt and the rest of Africa, there is demand, but they don't have the dollars to pay us. So, we are wary of that. We don't allow sort of credit to, that way we are conservative. So we do give credit on LC terms only, not open credit for those reasons. So, sometimes they even want to pay us in advance, but they don't have enough dollars. So those kinds of issues will continue going forward. And we'll have cycles, but we're quite happy with the progress on the Taloja expansion and the way we have been able to grow business there. Okay. The other part we're really happy about is also NDR. While there was a little dip in margins in between for a couple of months, we, as I mentioned before, that we are only about 30% of the India market share. And so with some capacity being freed up for NDR, we've been able to also run our plant at almost full 100% capacity with the additional about 15%, 20% that is freed up because of the XNB plant. So yeah, overall, qualitatively, SB latex and NDR are doing very well. As per expectations, XNB, it's a margin issue, it's a full demand issue, you're right, pull from the market issue, so approvals are a little slower than we expected. So then answer your question.
So just one follow-up on that, actually. So you've obviously been telling us now for a while that percentage margins swing also because of the raw material and end product pricing moving up and down. But on an EBITDA per ton basis, are you sort of happy with where the rest of the business is, and is it where you would think was a steady state basis, or is there room for either improvement or you're seeing some worrying signs there?
So I think, look, NBR, I'll speak about the NBR business first. We did have a little bit of benefit for about 2 years when shipping rates were high, given that our imports of NBR were more expensive because of the higher shipping rates.
Sure.
So that's gone, and now it's normalized. And now the margins of NBR are as normal as they can get right now. Of course, we are, as you know, there's an anti-dumping case that's going on in the court. Not sure how it will pan out. So that's one thing that we definitely are looking for some help from the government. But nonetheless, we are competing, and we're okay with the margins that are currently there in the NBR, and we're competing. The second is on SB latex front. Yes, currently the margins are a little lower than what we have seen in the last couple of years, partly because of the supply that's come in from us as well as our main competitor in this business. So, I think over time that will improve as capacity utilizations go up again for us and our competitor with market growth.
Okay, got it. That's helpful, and wish you all the best.
Thank you.
Thank you so much. The next question is from the line of Ankit Kanodia from Smart Think Services. Please go ahead.
Hello.
Yeah, go ahead, Ankit.
Hello. Yeah, thank you. So my first question is related to the divergence of volume growth and margin suppression. So do we have any history in the past where we have seen something like this, or how do we look based on the current scenario in terms of all-time high growth in volumes and probably all-time low or near-term low in terms of margins?
Look, I think one big reason is the nitrile latex for gloves. Obviously, that's something new for the company. So yes, we have not seen this before. We came up with a new plant. We are pushing to sell more material, but we are selling it at very low margins, close to zero, as I said. So obviously, that's pulling the average down. The rest of it, and I've mentioned this before, if you remove the nitrile latex chunk, you'll see some ups and downs in cycles. There'll be a couple of lower quarters, couple of higher quarters. On average, we are confident of doing at 14-15%. In fact, even nitrile latex pre-COVID, the little that we had started selling was at margins that were better than 14-15%. They were closer to 20%. So we were quite excited about this business. Unfortunately, the market has turned at the time when we entered the business with larger capacities. And obviously, in the last couple of years when demand for gloves was very high, margins were as high as 35-40% as well. Of course, our volumes were much lower at that point. And the rest of the business is kind of cyclical. We're okay with it. No major change.
Got it. My next question is related to the capex and debt. So last quarter also we mentioned that we are done with capex and right now we are stabilizing, and same is the commentary in this quarter as well. But I see debt rising every quarter. So Q1 also the debt rose sharply, and so is the Q2 debt numbers. So what is our view on the capex going forward and the debt level from here?
Wait, what do you mean Q1 debt rose sharply versus Q2? Where did you see those numbers? Sorry.
Q1. Yeah. Sorry, not Q1. March, compared to March. That is what I mean.
Yeah, okay. Yeah, compared to March for sure, because, out of the capex that we had done, obviously a large chunk of the payments that were required, and therefore we had raised debt, a term loan of about 125 crores. So a large chunk was taken in the last quarter of last year, and therefore, or the last half of last year, I would say. And so therefore the debt has gone up, but we're quite comfortable with it. We have 125 crore long-term debt. Obviously, with the volume growth, some amount of working capital has also gone up. But we also have about 100 crores of cash on the books. investments that we have kept for potential opportunities, whether acquisition or even investment in the future. So we do like keeping a little bit of cash. So we think 100 crores is about one month revenue.
Okay. And my last question is related to ApcoBuild. Any new geographies we have entered recently, or it's the same 4 old geographies we are in?
No, we have. We are in a couple of new geographies within the same state, and we are going further south as well a little bit in Karnataka, Goa, Maharashtra, Gujarat, MP. These are the 4 or 5 states that we're focusing on, but we are doing some business in other states as well. But so far, investing more in tier 2 cities of these states.
And what has been the volume, in the performance for this quarter in ApcoBuild?
We don't give specific numbers, but
No, I'm not talking about numbers. In general, the growth rates of ApcoBuild compared to last year and last quarter.
No, we're very happy. We're at double-digit growth in ApcoBuild for the first half.
Okay. Yeah. Okay. Thank you so much. That was from my side.
Thank you.
Thank you. The next participant is from the line of Piyush Agrawal from SOIC LLP. Please go ahead.
Thank you for taking the question, sir. So one question was, can you again please give us the numbers? See what were the margins in Latex pre-COVID?
Sorry, say that again. Margins in nitrile latex?
Pre-COVID.
Yeah. Pre-COVID also, they were at about 20% EBITDA margin.
20%. And sir, what is the current capacity utilization in nitrile latex?
It's around between 25 to 30%.
25 to 30%. And sir, last question on this, because latex chemistry is like a vast chemistry and it's like a multi-billion-dollar market. Are we planning to enter any other products, and also who will be our peers in the domestic landscape, not in India but in the other type of latex products that we are selling right now?
Look, I don't want to take names of other competitors. I think this is easily available. You can search it on Google. So I'll leave it at that. And what was your first question? Sorry.
So do we plan to enter any new products in the latex chemistry? Because
I think I answered that question. There are a couple of applications that we're working on. One is geotextiles, where we've already made some headway. There is batteries, EV batteries that perhaps need some amount of the kind of products that we make. Of course, some changes have to be required, so we're developing those kinds of products. So different applications, new applications for our products. As I mentioned, there are a lot of applications that are moving to water-based technology. So that's been, one advantage for us. And so we're trying to see if we can take advantage of that situation as well. So really opening up markets that were not traditionally there for us. So that kind of R&D work is going on. And then, of course, new products that will require a reasonable amount of investment, that's been worked on as well. And at the right time when we're ready, we'll announce it.
Okay. Thank you so much. Thank you so much, sir.
Thank you so much.
Thank you.
The next question is from the line of Karan Sharma from Credent. Please go ahead.
Hello. Yeah, Rajan. I have two questions for you. The first one is that incrementally over the next 5 years.
Sorry, I can't hear you, Karan. Your voice is very faint.
Yeah, they are getting audible now?
Go ahead. Let's start again. Yeah.
Yeah. So first question is that incrementally over the next 5 years, most of our growth is going to come from this nitrile latex, which will be for gloves. And primarily this is for the export industry. Now, right now we are 70-30 in terms of domestic revenue and exports. And I think this will shift materially to at least 50% or more around exports. And I just wanted to know that...
Probably not 50% because the rest of the market will grow as well. But yeah, I mean, somewhere between 40-45% is what we reckon at full capacity of everything,
Yeah. So in the domestic market, you are either number one or number two for most of the products. But in this product, you would have a very low market share in the global industry.
So I wanted to know that what are working capital changed materially? Like margins, you had already mentioned these were 20% pre-COVID, but in terms of working capital, would it be better than what we have currently, or is it worse since it's an export product?
No, it's so of course during COVID was much better because payments were pretty much advanced. But obviously now we have to give credit to our customers. The nature of the industry has changed, and so it would be in line with the rest of our industry, with the rest of the sort of.
Okay. Yeah. And the second question is, if it's possible for you to answer, how much is the exact capex only for the Valia capacity, which was added 50,000 tons out of those 200 crores?
It was about 150 to 160 crores for Valia and another 50 crores or so, a little less than 50 crores for Taloja.
Great. Okay, that's it. Thank you.
Thank you so much. The next question is from Tej Kumar Pandya from Ganesh Talk. Please go ahead.
सर पहला तो हमारा सवाल ये है कि जो आपका ट्रेड आउटस्टैंडिंग है फ्रॉम मार्च 2023 to September 2023, it has outstanding has increased from 137 to 174 crores. तो ये है सर, what is this due to? मतलब आप ज्यादा खर्च नहीं कर रहे हैं अपने कस्टमर्स को फॉर पेमेंट?
Well, look, I think one reason, as I just mentioned to the previous caller, जो हमारे नाइट्राइल लेटेक्स के जो पहले एडवांस में पेमेंट मिलते थे लास्ट ईयर तक, वो अभी हमें क्रेडिट देना पड़ रहा है, तो वो एक इंक्रीज है. और दूसरे जो वॉल्यूम ग्रोथ हुआ है, बिकॉज ऑफ दैट थोड़ा बहुत ज़्यादा देना पड़ा है इन द लास्ट एक महीने, आई मीन एक क्वार्टर में. बट ऐसा कोई बड़ा इशू नहीं है.
नहीं सर, ऐसा हमें तो लगता है कि आपका जो नेट प्रॉफिट मार्जिन है एनपीएम है 2023 में इट वाज अराउंड 10%, और अब देखा जाए तो दोनों क्वार्टर में, जून क्वार्टर में और सितंबर क्वार्टर में दैट एनपीएम हैज कम डाउन बाय 50%, 5% हो गया है.
बट द मेन रीजन फॉर दैट जी इज, ये तो छोटा रीजन है. जो डेटर्स, मेन रीजन वैसा है कि क्योंकि हमने ये 200 करोड़ इन्वेस्टमेंट किया, सब कैपिटलाइज मार्च में हुआ था, तो डिप्रीसिएशन का बड़ा हिट होता है, इसलिए नेट प्रॉफिट मार्जिन उसमें से शायद 2%, तो उसमें 2-3% तो डिप्रीसिएशन का होगा. और दूसरा है जो टर्म लोन हमने लिया है 125 करोड़ का, उसका इंटरेस्ट इज हिटिंग द पीएनएल. तो दोज टू आर द मेन इश्यूज.
अच्छा, तो हमें एक्सपेक्ट कर सकते हैं कि 23-24 में तो नहीं, 24-25 में ये सब जो एक्सपेंडिचर खत्म हो जाएगा एंड योर प्रॉफिट मार्जिन विल बी 10% प्लस, ऐसा उम्मीद कर सकते हैं?
आई होप सो, दैट्स द एंडेवर, दैट इज व्हाट वी आर ट्राइंग. वही तो कोशिश है.
अच्छी बात है. ओके साहब, ऑल द बेस्ट. थैंक यू सो मच.
Thank you, sir.
Thank you so much. The next question is from the line of Jatin Chawla from RTL Investments. Please go ahead.
Yeah, hi. Thanks, Abhiraj. Thanks for the opportunity. 2-3 questions from my side. First one is on the NBR side, you talked about this EV transition. Now, whilst I understand that in India the transition will happen gradually, but globally also if the transition happens, and since this is a product which, unlike some of your other products, kind of travels easily, will that not impact overall demand supply dynamics for this product?
Yes, of course, that is a concern, and therefore that's one of the concerns that we're waiting and watching. Of course, all the predictions are that it's not going to happen overnight. It will happen over 10-15 years, and especially if they're hybrid cars, then they don't affect NBR demand, for example. But wherever we are completely EV, then that does impact. I think, look, it will impact our competitors first because they have much larger plants of NBR and mostly catering to, China is a large market. So there would be a correction in supply as well if that happens. In fact, 2 years ago, one of our competitors did announce that one of the suppliers of NBR did announce they are coming out of the NBR market, but then they chose to stay in it for whatever reason. I'm not sure why. So they retracted on it. So certainly, I think supplies will correct as well, because for them, if China is a large market, then in EVs, cars, is much larger percentage in China of the NBR consumption, I think it's going to affect those markets first. And even though travel, where there is a cost to the travel anyway, there's also duties, there is, all that's an extra cost, at least for competing in India.
Got it. I think in the last call, you had also spoken about the fact that this multi-purpose plant at Taloja, you had environmental clearance for 10,000, and that is why the capacity, production was kind of limited to that number. Do you have all the clearances now to go to the enhanced capacity of 30,000?
Yes, we do. Good. I'm glad. I'm sorry. I think we should have mentioned that in our opening statement. Thank you for reminding us. But yes, we have received the full consent to operate to go to the full capacity.
Okay. So, and this came towards the end of the quarter, or was that capacity available in the quarter as well?
No, very recently, unfortunately.
Okay. So we should hopefully in the next 2-3 quarters see that kind of ramping up.
That's the hope. But look, in unlike nitrile latex, where we were new to the market, in that one, I would say in the first 6 months, getting to about 1/3 capacity utilization itself has been a great achievement. We didn't expect that. We were expecting, slowly ramping up over 2 to 3 years. And 1/3 is what we were expecting at the end of 1 year. So, yeah, that's going to ramp up slowly because there, we are quite cognizant of the fact that we don't want to flood the market just because we have the capacity. That will, of course, eventually affect margins. So, we have to play that sort of tight scope of increasing volumes without affecting margins too much.
Got it. You spoke about the fact that on the nitrile latex side, you are expecting a slightly slower ramp up and, the 90% utilization that you had earlier thinking of by the end of the financial year now seems difficult. So what sort of ramp up should we now expect by the end of this financial year?
Oh, look, when I said 90%, I meant like, monthly, for example, by the end of March, we were hoping to do, at least 90%, if not 100%. In the current context, also our endeavor is that because, this is like a jump, right? You get 1 or 2 large customers to approve your product and when the pricing is right, then you could complete it within 1 or 2 months, not at the end of 6 months. So it just depends on how fast a few customers approve our product, frankly, but at this, at these margin levels, some large customers are asking for prices that are below EBITDA, and that's definitely not something we want to do, or below even sort of gross contribution. So that's the major issue more than anything else. So it would just depend on how, you would rather not sell than sell at a loss, right? That's
absolutely
the bottom line. So we are focusing on smaller markets, newer markets. So we shifted on our strategy instead of focusing only on Malaysia and Thailand. We're looking at, Vietnam, Turkey, India. A few plants have opened up in India in the last year. Sri Lanka, smaller companies in Thailand and Vietnam and Malaysia and Indonesia that we had not earlier looked at. So we're trying to do business where we're at least EBITDA break even.
Got it. Oh, okay, this is great. Thanks a lot for answering that.
It's a combination of commercial and approval issues, I would say.
Okay. Thank you.
Thank you.
Thank you so much. The next question is from the line of Nikhil from SIMPL. Please go ahead.
Hi, good afternoon. Am I audible?
Yeah, go ahead.
Yeah, just 2 questions. One is, I think, congrats for a very strong ramp up in the export volumes. But just to understand the context, when we talk to other chemical companies across the board, they all complain about a significant inventory destocking and volumes not growing and volumes going down significantly. What is helping us to get the volume growth of almost like 100% in export market? And connected question is, if we go through our presentation, we said 120% volume growth in export, and the overall volume growth is 28%. And if last year the mix was of domestic and export was something like 80-20 or 75-25, it seems domestic volume growth is only single digit. or probably flattish. Is it a right interpretation?
No. So last year it was around 80-20 was the growth. I am just trying to see whether I have the breakup of domestic versus export. Sachin, do you have the domestic growth versus export growth? So I'll answer your first part of the question. The export volume compared to other companies, look, every company has a different context. In our context, there are two things. One is the nitrile latex. Obviously, the new plant that is coming, that is helped to the volume growth, and that is largely export. That's number one. And the second is, look, I think the war in the Ukraine and Russia to some extent has, to a large extent, has increased energy prices in Europe. And so what we're finding is some of our European competitors, their costs have gone up significantly. And so we've seen a benefit of that. We've also seen in some markets a benefit of the China plus one strategy. So it's a combination of two or three things why our exports have gone up. I hope that answers your first question.
Okay.
Yeah.
Okay.
And as I said, every market is different, every company is different. I think, the market looks at chemical companies in one broad stroke. I think that's a pretty simplistic way of looking at it. I think there are many sub-industries within the chemical company, and I think as analysts and investors, I always encourage my investor friends to try and understand more about the chemical industry and see, there's so many different pockets to it, and they may work very differently. There are some chemical companies that are doing fantastically well and some that are, making losses. So I don't think it's fair to talk about it as one industry. As far as export and domestic volume growth is concerned, obviously the volume growth in exports has been much better. However, than the domestic, but the domestic has grown as well. There's no question about it. But you're right, maybe in sort of single digits or, do we have that information, Sachin?
Yeah. So approximately around 7 to 8% have grown domestically in volume.
Compared to Q2 last year in domestic?
Yes. So half year.
Oh, for half year. Okay.
Okay. Just two more questions. One is, if you look at the employee cost, there is a jump from that 14 crore run rate to almost 17.5, 17. Is it because of these two capacities coming up, and is this the run rate which will sustain on the employee cost, or is there any one-off there?
Yeah, you're right. There has been a bunch of hiring that we have done for the new plant. So obviously that's one, and I don't know where you are comparing. I think if you're comparing to last year, obviously increment. Oh, quarter on quarter.
Q1 we were at 14 crore kind of a run rate, which is now 17.5 kind of a run rate. So that is where I'm.
Okay, it could be. One is our increment cycle, starts after, sort of gets completed by June. So therefore, part of it could be the increment, and then part of it is also more people that we have hired in the last 6 months for the new plant. I think going forward, this is going to be the steady state, and I don't think we're planning to hire too many more people anymore.
Okay. And last question, this is more structural on the margin profile currently. See, if we since we've been following you for last 3-4 quarters, and we have been continuously mentioning that the glove capacity or the glove business is largely breaking even or probably making a single-digit margin. X of that, would it be right that the total X of that, the rest of the businesses are operating in that 13 to 15% kind of a margin? And for the company to move to that 15%, the glove business has to move to, say, a double-digit margin, or do you think without that also we can achieve that 15% margin profile?
Well, if you want to grow in the glove business, and if we are endeavoring to grow, obviously more and more revenue comes from the glove business, then we do need it. Right? If you make glove business zero today, then tomorrow itself our margins will go up. Right? Obviously that's logical. However, we are strategically quite in the long term still bullish on this business. We are one of few companies in the world that make this product. Unfortunately, the industry itself is going through a structural change. we have to wait till things kind of settle down. So to answer the question, yeah, we would need the glove industry to recover and glove business to go to double-digit margins to go back to 15% levels. Without that, it will be difficult.
Fine. Thanks a lot.
Thank you.
Thank you so much. The next question is from the line of Puneet Patni from CED PMS. Please go ahead.
My first question is, can you tell me the impact of ethanol blended fuel on the NBR business?
No, there is no impact on ethanol blended business because even with ethanol blending, you still need NBR, so there is no impact with that.
Because I was reading few studies that mentioned that NBR isn't compatible with high amount of ethanol blended fuels. Is it true or?
As far as I know, as of today, and I'll look into it, but ethanol blending is up to 20% max. So I don't think at least up to that level it's a problem. And I have not heard this, frankly.
Okay. My next question is regarding the XMG latex business. So how do you compete with your larger peers in this segment? What is the USP of your product?
Yeah, look, we do have certain USPs in our product. The technical sort of, technical things that we have in our product that we have sold to our customers. But at the same time, that's not so much to not giving us premium pricing in the current context. We're also manufacturing it in a different way than our competitors. So we have certain cost advantages when we get to full capacity levels. Obviously, at these capacity levels, they have not kicked in yet. So both in terms of process and product, so in terms of cost and some product parameters, there are some advantages that we are giving customers, which is why we've decided to enter the business not completely just because on a me too basis, but given the current industry structure, it is a little difficult to get the pull from customers. That's in the current context.
Okay, that's it from my side.
Okay, thank you very much.
Thank you so much. Ladies and gentlemen, as that was the last question for the day, I would now hand the conference over to the management for the closing comments. Over to you.
Thank you, everyone, once again for joining the Q2 conference call of Apcotex Industries Limited. We look forward to seeing you in Q3 again. And in the meanwhile, if there is any major announcement, we would be doing so through the right channels, through the stock exchanges. Thank you very much.
Thank you very much, sir. On behalf of Apcotex Industries Limited, this concludes this conference. Thank you for joining us, and you may now disconnect your lines.